Hello everyone. In our last video we went over a little bit about using time-based Fibonacci, and in this one we're going to go zoom into process a little bit more and look at this from an intraday perspective, and we're going to use a little bit of waveform Fibonacci, a little more of a traditional sense, I guess you could say. I guess this is the way most people view using a Fibonacci tool, or the smart way of using it anyway. And what we're going to do is we're going to use our Fibonacci and try to look for trades during the day. And what we're going to look for is once we have a movement, there's usually a retracement to that move. All right, and what you're wanting to see is a continuation of the bigger move, not the retracement. You want the retracement just to line you up into a trade to go in the direction that the market was originally trying to head, or trying to trend on these smaller time frames. All right, now by the time we get to the end of this example, it'll be pretty self-explanatory. I think you'll understand it quite well. And it won't take very much, because this is a very quick lesson and it's very easy to do here. All right, now, so what we're going to do is we're going to go back and we're going to look at how we would have performed over just last week alone, and we'll kind of put some pointers in here of what to look for. So what we're going to do is we're going to go back to where we would have been starting last week. All right, if we would have been looking at this from an intraday perspective of the previous Friday and how the price action reacted, that following Monday. All right, now when we're looking, since this was a bullish day, we're always going to look for continuation in the long direction. So after we have a bullish day, we're going to look for this to retrace, find support around our Fibonacci levels, and then show us some bullish price action in these levels, and that's what we want to try to enter to get long in this. Since we did have a bullish day, we're going to look for that to continue into the next day. And if we don't get that, we'll just stay out of the market and we'll wait for it to set up for us. All right, now with this being a Monday, we can get, as the market begins to retrace here, late Friday, we see that continuation into this Sunday, which I really don't agree with these Sunday candles here, but I guess some brokers do it. But it's very deceptive, especially for people who are using indicators. Because your indicators are counting this 3 or 4 hour period as a 24-hour period. So I just thought you might want to know that. But anyway, what we have is we have our movement, and then we have our retracement. I guess we need to let's zoom in a little bit so we can see this better. All right, we have our movement that establishes this was a bullish day. Then we're going to have our retracement here. And what we're looking for is the reaction to price as it gets into these levels here, because if price were to make a bounce from this 38.2 of this Friday, we would want to see it break these three resistance levels that are built up as it begins to retrace here. And what we see is the market finally comes up. The bearish price action is just not there, even though it does kind of stall out here for a couple of hours. But you have to be wary, especially early on a Monday, and especially when you get some really small candles during a Monday. So I would have waited for a little more price action here. All right, now once price did get above this, we actually show it breaking and showing back that the long is going to continue here, because we did make the bounce off of here. We broke the three resistance levels of this retracement. Now the market comes up and it finds once again resistance from the actual little swing here after the intraday movement, and that's when we actually hit our target point, and we fail to reach that target to show indication on the 1 hour time frame here. So what we get is the market retracing back through. So now we're going to follow each little wave. We did get a bullish wave, so we're still going to consider this next little wave here bullish. But what happens is the market just completely blows through support here. By the end of the day, it comes to rest, and we end up now. So there really was no trade to try to buy another bounce there, so we just let it go. Come back and measure this wave. All right, now we have a very similar situation as we did from Friday to Monday, but now it's Monday to Tuesday, to where we have a late retracement here. All right, this retracement comes very close to a 38.2, probably not enough to trigger me into a short, because it just doesn't get cheap enough to carry out with this. All right, so now we're going to see, okay, since we didn't reach this, me most likely would not have gotten into a short here. Would have waited and let's see, okay, if this retracement, if the market makes this retracement, it comes back down, will it find support off this little swing here? And we'll look for a trade to go back long then. What happens is it fails again. It initially appears as though it's going to, but we never really begin to trade higher coming off of these levels as an indication that, we could probably take a long here, and we actually just blow through these 3 support points. So now we're back looking at a resistance wave when it finally meets or finds a bottom here. The market comes up, never really does anything. It acts like it's going to go short here. Let me get this one closer here so I can zoom in even more. Because we do show some pretty good signs here as as it made this initial movement on this Tuesday, that as it came up, you started to meet resistance in these levels, which would have, a lot of people, including me, probably would have taken this short here. But normally, as soon as I get into a trade now, what I'm going to do is I'm going to look at what is counter to my entry long here, or my entry short, excuse me. And you can see as the market comes back down here to try to continue this wave here, we get the short entry here, and now you can see that support never really fails here. So this is telling me if the market starts showing signs of moving back up, I may want to reverse my position. All right, because we never could break through this. And then we get a strong tail here on the bottom of this candle. So as soon as we come out of these previous 3 highs, that's a pretty good indication to, empty your short here and then try to get into a long position here and just target this little bullish waves target point here and just get out. Because once you get into the T1, T2 range, or your 138 extension or your 161 extension, that's a pretty good indication to just get out there, because especially if the market's going to retrace all of this that it just lost, and you may get into a ranging day here. So even though you would have taken a loss by taking that short, by measuring this bit of retracement that you got up into where you went short from, this also tells you that the market is not going to continue in the direction you're trying to trade to reverse your position and go back long. I may know this because it never could really break through that 61.8 of this little push up here. So by this point we're looking at maybe a bullish wave. What happens here? Well, the market actually falls out of this and shows that support has failed. So now that we're deeper into the week here, well, let me get that back. We didn't have it quite marked there, but it's still going to come out the same here. We have a break of support. So that would tell me, okay, and as this came down, there's never really indication that it's going to bounce out of here yet. So now we're looking at a smaller wave towards the end of the day and what could be, a ranging day. And once again, we get prompted into a short here because, late in the day we come up here, we meet resistance and we start to trade away from this, indicating, anywhere in here you could have come back in after you see this and put a limit order in this to try to go short with it. But it looks by the time you get into the break of the day, it's just not worth it here. It's gotten too late into the day, and I would be more apt to just follow these lows until it begins to trade up away from this again. All right, and here we have exactly that. We didn't jump in from this high down to this low as the market begins to retrace again after this, late push down, from about mid U.S. session all the on into the Asian session as it begins to trade up away from a low and create a low here. We know that we can measure this wave now as an entire wave and not just the 2 separate ones. We come in and we see some pretty good signs of the market going short, and this probably would have prompted us to put in a limit order here within these 2 or 3 candles here. All right, just like before, as soon as I get into this trade, I want to measure this bit of retracement that went against me here, and to make sure that we are going to break through these support points. But once again, here we have an indication of a really strong tail. It looked good here for pretty much probably the entire length of this candle. But now that the market is showing this really long tail here, there's a serious amount of buying pressure here, and this little bitty supportive wave is once again going to have its show its value to us, and we're going to reverse our position when we see that and trade it into this range here, just where you see it beginning to wick back from. So now I'm pretty sure there's a lot of others looking at the exact same thing here. And now that we get that continuation, we're looking for a bullish move to continue to buy into this. And what we're looking for is, as we make new highs, do we retrace into the support points to try to buy back into it and try to continue on with this momentum now. But we don't get it until pretty late into the U.S. session, and it's just a judgment call if you wanted to buy like these other traders were, and to see if you were going to get that late hit. But let's say you do buy into this here. All right. Then you're going to want to see what your opposition is. All right. Now the market comes up. You're buying it off these levels here. The only way you could have entered this was would have been to have just taken a limit order in front of the market. You really have to stick your neck out there for this one because it never really hung around these levels long enough that where you have one or two touches here. So this one's kind of a judgment call here. But let's say just for fun and games here that we actually got into it. And what would give me a reason to hold on to it if I did go long from this point? Well, the market comes up and it initially breaks this resistance here of this amount that it had retraced into support. All right, now as it comes back up to go in your direction, you can see that it breaks your three inner levels here and begins to open candles above this point and it kind of just stays up here. So as it makes new highs, we continue to follow it out. By the end of the day, it does retrace back into these as support points because remember you're still long from back in here. All right, and you actually hit the T1 of this last little push of the day. Now, to me, if I was long from here this late in the day and we start to run flat, I would put my stop somewhere down here below these three candles, especially once it runs out of momentum like this. And then you're looking to say, okay, well, now at the end of the day, we have this small wave. What happens? Market comes down, we have it breaking out of this. But don't forget, we still do have our intraday levels here. And if the market's going to try to bounce out of these, I kind of like to look at this as a general. The day we weren't so rangy as we were the day before, so we don't have to worry about these, each individual waveforms as much because we do have a much cleaner day here, a strong bullish day. So as the market came into here, we have a pretty good indication that we can go long here, and we have about with this one it looks like we had a little over an hour to decide if we wanted to go long in this or not, especially once we started showing bullish price action coming out of this, after a bullish day. So let's say, okay, we get long somewhere within 10 to 20 pips for this right here. We're going to say, okay, now what is going to oppose us? All right, let's say we measure this, the market comes up, we get long in this, and we get into our three resistance points to our trade here. Now, because this is going to be the initial resistance to a bounce off of our inner levels. All right, as it comes up here, it almost immediately gets rejected and comes right back out of them. So this is one of those trades to where we see it when it's moving this fast, especially when it recovers this much ground. Maybe it's time to move your trade to break even as soon as possible, as soon as you start to see this coming down pretty rapidly like this, because I'm pretty sure this came down pretty quickly here. And now you're no longer looking for shorts because the momentum is is quickly turning bearish here. So what you're going to do is we're going to continue to follow each little wave here, and we're going to look for shorts. Now here it starts to get really good for us because we actually finally start to get some continuation off these smaller waves. The good bearish price action here at the inner levels. It only goes to the 38.2 and can't get any higher. So a short here, we're going to target this T1, T2 level. Your 138 extension and your 161 extension. And it looks like we would not have been alone here because there were other traders getting out of the market here at the same point. So let's continue to the point where it makes the low to this little high, where we actually met that previous 38.2 retracement. And now we have the exact same thing. And a lot of people, you can continue to trade if you like, but you're taking your chances the later it gets in the day because most of the time you're going to consolidate during the Asian session anyway. But here's one that even if you would have gone short, you move up far enough in to profits here that this is one that you better not lose. And always be looking for the continuation. We have a strong bearish day. The market comes up and it finally reaches this 38.2 here. And we're showing some pretty strong bearish price action. So I kind of would have been looking at going below these lows here as an entry point. And let's say that we do get picked up here. What's opposing us here? From that low, we do get short here. And we can see that the market can't get below this 38.2 from the little support that's built up from it's moving up here. And this is most likely, a lot of this is all the ways going to be news related or fundamentally driven reversals like this, especially with the news that was going on all of last week, and a lot of panic that was in the markets. I would definitely, as soon as you get into a trade, start looking at what the possibilities that can happen to run the market against your trade. And this is one of the things you can do. But you can see is even if as you were short here, you have about 1 to probably 3 hours to decide if you want to get out of this or reverse your position. And you can either look at using these highs as your stop loss and just reversing your position with a stop and reverse trade, or just get out of your trade and then look for a second attempt at a 38.2, which you get pretty quickly here. So you could have just gotten out of your trade, waited for it to retrace again, hit the 38.2, and then go long with it for a target hit on your 138 extension. And by then it's the end of the day, and it's time to start looking for another trade. But that's really just little simple trick you can use, just following along with the waveform structure and how it unfolds, and try to get a grasp on hunting for those premium opportunities that give you a low risk entry point versus how much you stand to gain. And here we are on this Monday. It looks like this this volatility still here in the markets. And what you're going to be looking for now is if you've missed these trades going short, you would be looking for this to come up, meet resistance in these 3 levels here, and as soon as you see that bearish price action to where the market looks like it's going to fall back out again, then you can look at taking a short here and try to look for that continuation move back short. But by this time, it's getting about midway through the U.S. session here. So you just have to be careful. If you were to take an intraday trade like this from here, you're probably trading for a target point hit tomorrow of around 40.25. But if you never get any bearish price action from these 3 levels here, especially if it gets up here and you actually start seeing candle bodies above your 61.8 to indicate the resistance has failed here, and this may yet again turn bullish. You would just be looking at it from this perspective here. Does it continue to find support? And from where it is now, if it continues to find support, it most likely won't go below about 41.75 or so, I would say. But if it doesn't go below 41.75, you're going to get the bounce, and it's going to attack these resistance levels again, and they're going to try to just recover all this ground that it lost earlier. So there you have it. Very simple tricks. Very easy way to use Fibonacci. Not really needing anything else. And if you'd like to learn more about how to do these and some other few strategies, feel free to check us out at bobocus.com. We still have our live trading room, which is going well. And if you'd like to learn more about Fibonacci or just some simple basic support and resistance strategies, feel free to check us out. So until then, hope you enjoyed this. Thank you.